Hello everybody. I'll be presenting the financial statement analysis of Novartis and GlaxoSmithKline, which are the two leading pharmaceutical companies. First, let us start with the financing and investing decisions for Novartis. From the graph, we can see that the cash flows from investing and financing decisions are negative during most of the period. This implies that financing and investing activities are funded by operating activities, indicating a stable company having the ability to generate future cash flows. Next, let us look at the financing and investing decisions for GlaxoSmithKline. Cash flow from financial decisions of GlaxoSmithKline is consistently negative for the last 10 years. During the years 2007 to 2010, there is a sudden surge in cash flow from investing decisions, which indicates that the company has sold its investments for financing activities. Cash flow from operating decisions of company is increasing from 2002 to 2009 but has a decreasing trend since then. The above factors indicate uncertainty about company performance and its ability to generate future cash flows. Now, let us analyze the current ratio and liquid ratio for both the companies. As seen in the above graphs, the current ratio for both the companies is greater than 1 for the past 10 years. This indicates that companies do not have liquidity problems and they are able to raise capital from all sources. Also, the liquid ratio for both the companies is not less than 40% of current ratio, which indicates that the current ratio is not distorted because of slow-moving inventories. Now, let us look at the various cash flow statements of Novartis. From the above graph, we can draw the conclusion that the cash flow from operating decisions for Novartis has always been positive and more than cash flow from investing decisions and cash flow from financial decisions. This indicates that the company is following a healthy trend. Cash flow from financial decisions for Novartis was negative throughout, indicating that the company was paying off old debt and not raising new debt. Cash flow from investing decisions for the company was negative most of the time, indicating that the company is investing in asset creation and working towards ensuring future earnings. This is a healthy trend for the company. The next topic that we have analyzed is the cash flows of GlaxoSmithKline. From the above graph, we can conclude that the CFO for GlaxoSmithKline has been positive and more than CFI and CFF most of the time. This indicates that the company is following a healthy trend. In the years 2008 and 2009, CFI has gone above CFO. This shows that during these years, PPE or investments has been sold. This is not a good trend for the company. The CFF is continuously decreasing throughout the period and is always negative. This shows that the company is repaying loans, buying back shares, paying back interest and dividend and not raising new debt. In the next slide, we have analyzed the price to earnings ratio for both the companies. Price to earnings ratio is an indicator of investors' perception about the ability of company to generate future cash flows. The higher the PE ratio, the more the market is willing to pay for holding share of the company. PE ratio for GlaxoSmithKline is more than 15 from 2002 and has an increasing trend from 2009, which indicates positive investor outlook about the company. PE for Novartis started increasing since 2003 when the company started distributing dividend on yearly basis, resulting in increased share price in market. In 2008 and 2009, PE ratio decreased because of global slowdown but increased in 2010 onwards. Next, we will be looking at the price to book ratios. Price to book ratio of GlaxoSmithKline has increased in the last 10 years, but PB ratio of Novartis has relatively remained the same. Currently, GlaxoSmithKline is trading at 8.54 times its book value and Novartis is trading at 2.95 times its book value. Higher value of PBR indicates that the market has attached a premium to the stock price of GlaxoSmithKline above its assets. Lower value in case of Novartis may mean that market has not identified value in the company. Another way of interpretation is that Novartis is more appropriately priced than GlaxoSmithKline. Although price to book value ratio gives some understanding of how appropriate the market value of company is, it should not be considered as a conclusive evidence. Our next topic of discussion is return on capital employed. ROCE indicates how well the companies are utilizing their capital to generate revenues. GlaxoSmithKline has a better ROCE than Novartis. ROCE of GlaxoSmithKline shot off from 2002 to 2005 because the profits steeply increased by almost 50% in the year 2005, and also operating profits increased in the year 2004 and 2005. Novartis has a relatively same ROCE during the given 10 years. The value of ROCE for the year 2011 is less as compared to the year 2002. Even though the profits increased in the year 2011, but the capital employed also increased as the total assets and current liabilities increased, thereby impacting the ROCE for Novartis. Now, talking about return on equity. A declining return on equity in GlaxoSmithKline Pharmaceuticals is coupled with steady profits. It indicates that GlaxoSmithKline Pharmaceuticals has more debt. The thumb rule for value investors is to look for a consistently high return on equity. An ROE of 10% or higher is generally a sign that the company is managing itself pretty well. In this case, Novartis is managing well. The graph depicts that ROE of Novartis, which is 9.18, is better when compared to ROE of GlaxoSmithKline, which is 5.08. Now finally, talking about earnings per share. Novartis during the years 2002-2007 has witnessed mixed EPS growth rate, and as late as 2008 has experienced a steady increase in the EPS growth. GlaxoSmithKline Pharmaceuticals, on the other hand, performed extremely well during the years 2002 to 2006. In the later years, 2007-2011, it has experienced a mixed EPS growth rate, with the latest year 2011 witnessing a 24% drop in the EPS. In the year 2011, both the companies have similar EPS, with GlaxoSmithKline Pharmaceuticals holding a slight edge over Novartis. Thus, we come to the end of our analysis. Thank you.